Hey everyone, welcome back to Corporate Decoder, the place where we decode those juicy corporate filings, and I have to tell you, Pollo Loco Holdings has a real flavor explosion in its latest report. Let's just say things are well done to say the least. Before we dive in, if you appreciate getting these straightforward insights from company reports, make sure you are subscribed, and for those of you who want to connect with other corporate finance enthusiasts, join our Discord community. The link is in the description below. Alright, let's cut to the chase. Pollo Loco, the fast casual Mexican-inspired chain known for its citrus-marinated fire-grilled chicken, just dropped its quarterly report for the period ending the 24th of September 2025. Now, normally these reports can be a bit dry, but this one has some interesting takeaways. First up, the balance sheet. As of this reporting period, Pollo Loco had about $602 million in total assets. Now that sounds like a lot, but a big chunk of that, around $248 million, is goodwill. Goodwill is basically what you pay for a company above its identifiable assets. So think of it like the brand value and customer loyalty rolled into one, but it can be a tricky asset. They also have a significant amount of intangible assets in trademarks, another $61 million or so. On the flip side, their current assets, things they can quickly turn into cash, are just under $28.5 million. When we look at liabilities, they owe about $69 million in the short term. That includes things like accounts payable, about $10.8 million, and other short-term debts. Long-term obligations are even bigger, reaching nearly $250 million. This mostly comes from their leases. Their obligations under operating leases specifically amount to over $172 million. That is a huge commitment. They also have about $61 million outstanding on their revolver loan, a credit line they can borrow from. Now let's talk about the owners, the stockholders. Their common stock is valued at just under $300,000, which sounds tiny, but that is just the par value. The real value is in the additional paid-in capital, which is a staggering $245 million. This is money investors paid above the par value for shares. Retained earnings are about $37 million, so they are making some profit and reinvesting it. Moving over to the income statement, Pollo Loco brought in about $121.5 million in revenue for the 13 weeks ending the 24th of September 2025. That is a slight increase from the same period last year. For the year-to-date figure, they've raked in over $366 million. The bread and butter company operated restaurants brought in just over $100 million for the quarter. That is a tiny dip of 0.5% year over year. For the year to date, it is up by 0.9%. This is coming from a slight increase in average check size due to price hikes, but transactions are down by 1.3%. So people are paying more but coming less often for those particular restaurants. Franchise revenue saw a much stronger jump, over $12.8 million for the quarter, a good 13.5% increase. This was helped by new restaurants opening and something called a pass-through revenue related to a new point of sale system rollout for franchisees. So pretty much the franchisees are spending more. Now for the costs, food and paper costs were down for the quarter and year to date. That is a good sign, likely due to lower commodity prices and efficiency efforts. For the quarter, these costs were 24.7% of company-operated restaurant revenue. Labor costs, however, are a different story. For the quarter, labor expenses dropped by 6.4%, which sounds good, but it is mainly because sales are down and they've implemented some cost-cutting measures. However, wage rates have gone up due to legislation in California. So while they might be managing labor costs better on paper, the underlying wages are increasing. Labor costs as a percentage of company-operated restaurant revenue are down to 30.4%, but the increase in wages is a real concern. Occupancy and other operating expenses are up for the quarter and year to date. This is attributed to increased software maintenance delivery fees and general occupancy costs. General and administrative expenses, the costs of running the corporate side of things, are up significantly for the quarter and year to date. A big part of this increase is legal and professional fees related to shareholder activism and restructuring costs. It seems there is some internal management drama happening. They also reported a tiny loss on disposal of assets and some impairment and closed store reserves consistent with previous periods. Depreciation and amortization are fairly stable in line with their asset base. All of this resulted in income from operations of about $11.5 million for the quarter, an increase from last year. Year to date though, income from operations actually decreased slightly. Interest expense is down significantly, which is a positive as their debt is still substantial. On the tax front, they're paying around 29.3% effective tax rate, which is a bit higher than the statutory rate due to state taxes and some other deductions. All in all, net income for the quarter came in at around $7.3 million, a healthy jump from last year. Year-to-date net income is pretty much flat at just under $20 million. And the earnings per S-share for the quarter is 25 cents, and for the year-to-date, it is 68 cents. Looking at the shareholder equity section, El Pollo Loco continued its share repurchase program, buying back shares to offset employee tax withholdings, which is standard practice though. They did not repurchase significant amounts under their main repurchase program, which expired in March. The company's property and equipment are valued at about $88.9 million after depreciation. They have also been investing in new construction and remodels. Stock-based compensation is an interesting area. They granted stock options, restricted stock units, and performance-based units to employees. This is a pretty common way to reward and retain talent, but it does dilute existing shareholders. Total stock-based compensation expense was around $1.4 million for the quarter. Their shareholder rights agreement from 2023 expired in May 2025. So that is off the table. Now, under revenue recognition, they talk about their loyalty program, Loco Rewards. They have over 4.6 million members, which is a great sign for customer engagement. Revenue from unredeemed points was about $1.1 million. They also sell gift cards and have a significant gift card liability. Leases are a big deal for El Pollo Loco. They have over $169 million in right-of-use assets for operating leases and over $172 million in lease liabilities. Their annual lease payments are substantial. It is important to note El Pollo Loco operates as a single reportable segment. This means all their restaurants are managed and reported together. They are not breaking out performance by region or type of store. Now to the key performance indicators, company-operated restaurant revenue is up slightly year over year, showing resilience. However, comparable restaurant sales, a really key metric for existing stores, are down. For the quarter, system-wide comparable sales decreased by 0.8%. Company-operated comparable restaurant sales are down 1.1% for the quarter, driven by a drop in average check size and fewer transactions. This is a bit of a red flag because even with price increases, customer traffic is declining in their own stores. Restaurant contribution margin, a measure of profitability at the restaurant level, is about 18.3% for the quarter. This means for every dollar of sales from their own stores, about 18 cents is left after covering direct operating costs. This is up slightly from last year. Finally, EBITDA and adjusted EBITDA are the measures they use to show their operational performance before certain non-cash items and one-time expenses. Adjusted EBITDA for the quarter was about $17.4 million, up from $15.4 million last year. This shows they are managing their core operations well, even with some of the corporate noise. The report mentions significant increases in legal and professional fees related to shareholder activism, which shows there might be some internal battles or pressure from investors to navigate. So what is the story here? El Pollo Loco is showing some signs of life with increased revenue and improved restaurant contribution margin. They are expanding their franchise operations and engaging customers through their loyalty program. However, the declining comparable store sales in their own restaurants is a concern. It suggests they might be struggling to attract and retain customers at their existing locations, especially with rising labor costs and inflation. The increase in general and administrative expenses driven by shareholder activism also points to potential internal pressures or strategic shifts on the horizon. Overall, El Pollo Loco is navigating a challenging market with a mix of strengths and weaknesses. They are showing some operational improvements but need to find a way to drive traffic back to their stores without solely relying on price increases. What do you think about El Pollo Loco's latest report? Are those declining comparable sales a cause for concern or just a blip on the radar? Let me know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives into corporate filings. And remember to join our Discord community linked in the description for more discussions. Thanks for watching, and we will see you in the next Decode.